And we are live. Hello, everyone. Welcome to a new episode of Blockchain Talks. Today's episode, topic is going to be about why we are still very early to the cryptocurrency and Bitcoin game. Now, before I do that, I'm going to do a small technical analysis, current state of the market before I indulge into, the topic at hand. Anyway, I'm at CoinGecko here, going to do a quick load of the website. There we go. So as we can tell, market is trading sideways. Not all too many differences in gains or losses here. It is green, the market. So it is in profit between brackets. However, as you can tell, not all too many gainers here. I'm just going to do it I'm going to do on a 7-day. So there are a few with 7-day, but most of the time, I'm going to refresh here. It's trading sideways. So the only big differences are with the new cryptocurrency coins, etc. Now we are going to zoom in on Bitcoin as per usual, by reason it still has the highest market dominance. Let's get on here. By clicking it, I see here 1.1% down, probably in the last 24 hours. So as you can tell, there is some volatility here. Earlier today, started trading at higher highs, so at above the 39K level. Big down again, but seemingly here met resistance levels, bought back up, and is slowly climbing, trading back above the 38,500K level. Let's zoom out a little bit more. As you can tell here, we are trading more sideways. We are, average value is at around 39K. We're now slowly, slightly underneath it. We might see a little breakout towards the 39K once again on the 7-day average. 14 days, as you can tell, it becomes more and more obvious we aren't really in a bear market nor in a bull market. We are trading sideways. This, in comparison with other influencers, other YouTube live streamers who will tell you, yeah, it's a bear market, it's going down. And I've already seen on Twitter and various social media people telling we're going to crash down towards 20K. Don't believe those guys. That's bullshit they're talking about. We're trading sideways. As you can see, it becomes more and more obvious when you start zooming out. This is on the monthly average. So February, sure, we had a few peaks here, the 42K level, but as you can tell, everything averages nicely out at around 39K. Everything underneath 39K at this point is a little bit of a bargain. There is on the monthly, as you can tell here, a heavy dip that occurred at the end of February approximately, which was a nice opportunity to buy in. Zooming out towards the 3 months average, you can easily tell, we are trading sideways. Sure, there are a few dips here, a few heavy ones, 35K. As you can tell, and I mentioned it, I believe, in last week's episode and a few times on social media altogether, take notice of the 35K levels. If we drop there, suddenly it is opportunity to buy. This is where the biggest resistance levels are. But as you can tell, we are, trading sideways. Nothing really else to add about it. And we're going to do so for the forthcoming years. To that, I refer to one of my posts made on graciousInterests.com. I believe it is the second last post I've made about Bitcoin and market cycles. I am expecting the market to behave this way, even despite the Russia-Ukraine conflict, by reason it is how the cryptocurrency market behaves. You have your pre-halving event whereby the value goes slightly upward, corrections occur, and then approximately a year later, when the supply shock really occurs, that value starts to increase tremendously. It reaches an all-time high once or twice, doesn't matter, corrects, and then starts trading sideways for some time up until the next pre-halving event. Next halving of Bitcoin is 2024, so within 2 years. So expect this year and next year, well, to have sideways trading, perhaps depending on how the news evolves, how adoption occurs, what happens on a world stage in finances. We might see some further corrections or some higher trading upticks. For that, I refer to the marks chart here. So basically, I'm stating we are, make things more clear here. So this is what we had, a little bit bigger here, prolonged, some volatility here, and then it was sideways trading, had a little correction here, back up, and in May 2020, this is the pre-halving event. Oh no, sorry, that's January. So there was some pre-halving. There was a pre-halving event in May. However, COVID occurred. World went in lockdown, so small correction back down. But towards May, we recovered. Some sideways trading, and as you can tell here, January 2021 skyrocketed an entire year bullish run. It's nice. And now we're back here, sideways trading. So we will see something akin to this occurring. I do not immediately know why there was a little downside here. However, I believe it had something to do with Tether being exposed of having inflated Bitcoin numbers. Anyway, but as you can tell, I've put it here on max listing. We are pretty early. An exponential rise. There is a lot of volatility here. However, I'm not going to indulge deeper into it. Just remind yourselves, I'm going to put it logarithmically here. These are the gains we are making. This is the only chart you need to remember when you're buying Bitcoin. Anything else whereby people are speculating we're in a bear market, it's going down, it's going to zero, forget about it. Remember this chart, we are going upwards. And at this point in time, you can even clearly see it here. We are trading sideways in this very short interval. I'm going to put it like that. Even going to further zoom in more. There we go. That's sideways trading here, which is occurring. So you do not need to be fearful. Sideways trading, not a bear market, and we might see some further upticks. Simple as that. Now, let's continue with the topic of the day. We are still early. Now, why am I making that quite obvious statement? Well, Bitcoin has been around for about a small decade already, slightly more. And people are taking notice of it, especially with the Russia-Ukraine conflict, whereby cryptocurrency is taking a central role. Last year, a lot of financial investors finally jumped onto it. And with that, I'm really talking about Tesla, JP Morgan, and the likes. MicroStrategy is also a big one. They're starting to take notice. And even last year, during the bull run, various politicians, governors and senators, presidents, etc., are getting their hands into Bitcoin. In the previous episode, I have talked about regulations and legislation. Now, that alone should already be a pointer how early we are to the game. Yes, it is more than a decade old, or proven and tried and tested Bitcoin. It is more than a decade old, and in some cases you might say, yeah, in internet terms, it's old. Speaking about software and etc., we might say it is already old. But when it comes to finance, it is bloody early. And like I said, legislation and regulations that are occurring and being pushed at this point in time prove that part. And I refer back to the Blockchain Talks episode of last week. Now, I've prepared a few tweets and articles here just to show you guys how early we are to the game. I'm going to show you here. That's not it. I believe I made a little F up. Here we go. So it is from Blockworks from yesterday. US Senator Cynthia Lummis draft crypto bill eliminates capital gains on unrealized rewards from mining or staking. Handful people will think what we think they know what they are talking about. Sorry, guys, I'm having difficulties finding my words here. So there was a proposed draft for a bill, in which the bill stipulates that you should be paying taxes on unrealized rewards from crypto mining or staking, meaning the government wanted to pass a bill whereby you should be paying taxes on cryptocurrency you do not own yet, on the rewards you do not have gained yet, hence unrealized rewards. Now, the draft of the bill, well, the bill itself is pure bullshit if I say it this way, and this is the main article. Show you guys I'm not lying here and that it isn't pulled out of my arse. But bill from Bitcoin Senator Loomis would alter capital gains landscape for crypto. And the media supports it with a nice twist and say, look, isn't that nice? We are busy with legislating and regulating. They are trying to tax Bitcoin and cryptocurrency straight out of your pockets. By reason, well, they cannot afford to buy themselves in. By reason, crypto and Bitcoin is entirely distributed and decentralized. They have no grasp on it. So with various bill proposals, they will let it outshine and say we are regulating the market because it's a Wild West, plenty of scams, etc., etc. But the truth is they just want in on the money. They want to get a firm grasp on it and make profits on your backs. So these kind of bills are, quite frankly, tryouts. They're BS. They're bullshit. That's it. Why? Like I said, this bill is about taxing on unrealized gains, taxing on an asset you do not own yet. Can you sense the stupidity of it? And people will be applauding these kind of bills and say, yeah, there's finally regulations. No, they are getting involved in the crypto market and trying to get your Bitcoin and cryptocurrency for free. And I'm going to repeat it. And in the last couple of weeks, in all my live streams, I've been telling you guys this. They are trying to get your Bitcoin, they are trying to get your crypto for as cheap as possible for free in order to get a certain hold and strengthen their positions. It's not in your best interests they're proposing these bills. They're doing so to enrich themselves. And that's something I'm going to repeat from last week's episode. If they want to tax on your cryptocurrency, do not pay them with cryptocurrency. Throw their fiat trash money straight back into their faces. Meaning, do not cash out on your Bitcoin, do not cash out on any of the crypto coins or tokens you're holding. Take your fiat trash money you have earned from working or doing jobs, throw that back straight into their face, but keep your Bitcoin and cryptocurrency towards yourself, because they are after it. This bill proves it. Second one. I don't know what happened here. Probably because I changed the account. Sorry. This is another proof that we are still early. It's a little bit of an older tweet. Now I'm going to put this one away. Thank you for your financial advice, Lindsay. I hear she charges 30K. Now, this is about Lindsay Lohan, who was profiling herself as a financial advisor. And this is something which is biting her back in her butt. By reason, Lindsay Lohan is a renowned celebrity, a renowned actor, played in various movies. And we are early by reason that a variety of celebrities are getting involved with cryptocurrency, are trying to advise the market. And as you can tell here, help Dr. Doge, on her mission to stop domestic violence against women. She writes, all holders in BNB at 50 million market cap, they will give away a Tesla. How cool is that? Get in, we're going to the moon. Yeah, we are fucking shilling a BNB token, which is worthless. This is the chill, this is the rug pull. You see, we are still early by reason celebrities and various other people of renown are trying to get involved, are trying to shill a variety of projects, but have no first-hand clue what it is about, how the market works. if you want to become a financial advisor within cryptocurrency, if you want to financially advise people concerning crypto, well, quite frankly, it doesn't behave like the traditional financial market, whereby there are various signals. Of course, there are signals, but there are various signals and enterprises and companies which can inflate and deflate stocks, whereby governments can interfere on the value. With cryptocurrency, everything boils down to community. And that's why there exist things like rug pulls and scams and hype. By reason, people follow other people. It's the community making big time investments in such projects. And you might say, yeah, we need regulations to counter these rug pulls, to counter these scams. Now, what we are seeing here, especially in this example, isn't so much a scam or a hype, but it is the market in its purest sense. It is distributed, is decentralized. If you want to make money, you will know what exactly you are doing. You will need to know what it is all about. You need to know about the market and the community that supports the projects. So shilling might give a rise in value for short term and keeps it crashing down. Simple as that. Everything stands and falls with community. It is something I've been telling in quite a few communities to date, but it indicates we are still early. Posts like these let me remind myself of the days of the early internet with the dot-com bubble. There were plenty of websites making a variety of web shops and having their online presence, etc., etc., and all were revolutionary. There were celebrities backing it up, standing behind it. More than 85%, almost 90% of those ancient websites, they've gone defunct. They're dead. Only a few remained. And this is exactly the same thing with cryptocurrency. You need to know which ones are trusted, which ones have the greatest potential. And of course, there will be celebrities saying and influencers saying, look, this is a nice project. We're going to the moon, as you can see here on screen. But this doesn't mean they know what they are talking about. Do not forget, celebrities and influencers are frequently paid or have ulterior motives to promote a certain project. And then something like this happens if community support steers clear. Well, this is another example. Meta Netflix have an announcement to make today, 4 hours ago, and naturally back. Plenty of examples exist. Another proof we are still early. I'm going to close down the other ones here. There we go. You want to know how early? This is a post of myself. I'm going to show you the article. How badly understood Bitcoin is by lawmakers and greater population. Today, are European lawmakers voting if proof of work based coins should be outlawed and forcibly shifted to proof of stake? Clueless, I answered. But frankly, this is the article from CoinDesk. Now, basically, it is about a controversial new MICA law in Europe, which seeks to outright ban the speculation or ownership of proof of work based coins. And the idiocy here, I'm going to highlight it. Hold on, I've read it yesterday. Here it is. The provision in question requires all crypto assets to be subject to the European Union's minimum environmental sustainability standards with respect to their consensus mechanism used for invalidating transactions before being issued, offered, or admitted to trading in the Union. Quite a mouthful, meaning they want your money to be sustainable, between brackets. True kicker here is, for cryptocurrencies like Bitcoin and Ether, that are already being traded in the EU, will propose a phase-out plan to shift their consensus mechanism from proof of work to other methods that use less energy, like proof of stake. Now, we know Ethereum is being shifted towards a proof of stake network. They can do so because there's a central organism, mainly the Ethereum Foundation, behind it. There are active hardcore developers who naturally made a quote, and I'm referring here towards Vitalik Buterin and his entire team, who can do the necessary shifts on Ethereum. Naturally, Ethereum's source code is publicly available and everyone can play with it, but you still have a small centralized group who can make the calls. Bitcoin, on the other hand, for anyone who knows even the slightest slither of information concerning cryptocurrency, knows Bitcoin has been launched, and since then it's hands off. All proposals involving Bitcoin are based on layer 2 solutions, by reason the source code is available, but you cannot alter it as soon as it has been launched. This, unlike Ethereum, which has still a central foundation which can make the calls, despite there being miners present and a community yelling otherwise. That's the great difference. Ethereum has a centralized authority, hence why they can adapt towards a proof-of-stake mechanism. Bitcoin, on the other hand, doesn't. Sure, there are core developers, that's true, but everything, each and every change concerning Bitcoin must be led forward through its community. They have the vote, meaning their miners have the vote. This, unlike Ethereum, which can make the call and say, we are going to deploy that one, and we're making sure that the miners are put on the side. Bitcoin, it isn't possible. Community decides. And if you cast the vote for Bitcoin and says, look, we want you to become proof of stake, the community will reject it. And who is the community? Well, the community are all the miners, all distributed, decentralized miners, individuals worldwide. You cannot force all of them to accept the shift, by reason a lot of the Bitcoin miners, well, see Bitcoin for what it is, its strength in proof of work. Its proof of work consensus mechanism has made it as big as possible. And such a change is impossible to do so. But the European Union has got their egos up their asses. They're so stupid to think we can force them to make the change. No, you can't. Now, they voted on this yesterday and it has been rejected. I believe there was a follow-up. Here. May rejoice, but in a certain sense should they even be made up to vote. EU parliaments rejected the measure that could have forced proof for cryptocurrencies like Bitcoin to shift to more environmentally friendly consensus mechanisms. This is fake news, by reason they wanted it to shift, but, well, I'm going to put it in another sense here. That could have forced proof of work cryptocurrencies to shift to more environmentally friendly consensus mechanisms. It is fake news because they cannot force it. They have no bloody control over it. So even if the EU parliamentarians accepted the measure and said it needs to go towards proof of stake, no one would budge. Bitcoin will remain Bitcoin and will remain proof of work. None of the decentralized miner, well, no other person on the entire network will say, let's shift towards proof of stake. It can't be done unless you start forking, but at this point, you do not have the original Bitcoin anymore. You need to have a hard fork whereby more than 51% of the miners of the community accepts and says needs to become proof of stake. But you will never get to that percentage. So this vote is, quite frankly, bullshit. Picking on this is another article proving we are still early. Just because something uses electricity doesn't make it non-green. Does not use electricity, yada, 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 yada. You see that from Binance. And I did a little call out. And people might say, yeah, but it has nothing to do with cryptocurrency or Bitcoin. In a certain sense, yes. And I'm going to follow up with another tweet where I said, why do I say this? Clearly it's talking about efficiency and regulations. No, read the article in quoted tweet below. It's this article. And CZ is the CEO of Binance, of the Binance Smart Chain, And what do we see here? Well, I already quoted it, and it came down to, once again, that MICA framework about having greener coins and tokens. And this shit right here is bullshit. By reason, he's trying to pander towards EU regulations to remain active with his platform within European Union borders. And so naturally he's going to say, yeah, it needs to become more sustainable, etc., etc. This is related towards this article, meaning he is supporting it. It's bullshit. This once again proves we are still early. There are quite a lot of people, governments, banks, and even big platform holders like CZ Binance here trying to play sides in order to make a profit in fiat trash money. He doesn't have the crypto mindset. Also, Binance, while I must admit I have used the platform in the past, I've taken all my cryptocurrency off of it. By reason, there's a lot of distrust from my part towards them. This pandering from the CEO is one of the examples, but also there are blatant statements of saying we will comply with regulations in a variety of nations in order to remain active. We will work together with governments, meaning they are pandering to governments to leverage the markets straight into their own pockets. They do not care about their users and their trading and about cryptocurrency. No, they saw a market and want to leverage money out of it straight into them. They aren't crypto minded, they are fiat trash financial institution minded. Avoid at all costs. It's one of the reasons why I'm more trustful of Kraken, by reason their CEO and their team are cryptocurrency minded. When there were the very first regulations and legislation proposals in 2020 and 2021, their CEO actually stood up and said, no, 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 you guys got it entirely wrong, and he corrected them. There wasn't much media coverage. CZ, on the other hand, from Binance, took a different approach and said, we're going to comply with all your demands. This indicates we are still early, like I said, as people are trying to leverage the market and not helping develop it. In truth, CZ here is a big enemy of Bitcoin and the cryptocurrency market. In extension, Binance is as well. So this is a little bit of some hate talk towards Binance, but I'm going to be brutally honest here. Take your coins off the platform and let them bleed out. Yes, they might be the biggest cryptocurrency centralized exchange around, but they are not to be trusted. Something else which has to do with being early, it has to do with the Bitcoin Fear and Greed Index. By reason, it is a very simplified manner to see what market sentiment is about. And like I said here, the Bitcoin fear has become much like the doomsday clock, redundant. Now, what's the doomsday clock? Well, it is an imaginative clock that has been invented by a variety of scientists, which indicates how many seconds and minutes we are away from disaster, from a nuclear war, from, a world-changing event. And the Bitcoin fear and greed index is approximately the same, as it indicates, well, should we be fearful, should we be greedy, etc., etc. And people will sometimes base their buying opportunities, their buying stances on how this fear and greed index is performing. With extreme fear, people will think, oh yeah, there's extreme fear, people are selling off, now's the time to buy, or vice versa. Let's follow like a true sheep the entire herd, let's sell everything off. By reason the market's crashing, so we must heed the warning. Now, like I said, this is from yesterday, extreme fear. Just take a look at the market. And like I said early in this episode, we are trading sideways. Why should it be indicated in extreme fear? The market is quite stable. You shouldn't be fearful here. It is based on, false metrics. Yeah, it all was done. So I thought I had a little bit of explanation here, but I'll put it on my own words. If you're trading, there are a variety of metrics you need to take into account. Supplies on variety of exchanges. You need to analyze how trends are forming, and you need to relate it towards, well, current media events within the financial sector, which are related once again to cryptocurrency, etc. Those are things you need to take into account. And sure, there's a lot of volatility here, and there's the Russian-Ukraine conflict with cryptocurrency taking central stage, but market is trading sideways. That's something you need to know. And then only basing yourself on a fear and greed index, which only bases itself off on a few metrics, but which are incomplete, it gives a skewed view. And it once again shows how early we are. By reason, a lot of people are going to base themselves on something as simple as this, while in reality it is much more complex and much more thought-provoking. Well, you will be needing a lot more of brain power to read the markets. Hence why a lot of influences and trading views exist with various lines and people saying, yeah, it will go towards that number and that number. It isn't exact science. Everything boils down to speculation. And within my own courses, I frequently talk about reading the market and keeping up to date with the news to see how cycles evolve, how everything evolves. That's why I'm promoting a little bit my Ultimate Crypto Guide. I put in my trading course, Crypto Bull, inside of it. By reason, I'm giving you factual pointers on what to take into account, how to make the correct connections, and not getting caught up in shill and hype. Just knowing your fundamentals should be sufficient to know that you will be making a profit. I'm going to be brutally honest. Bitcoin, even with these corrections, I am still in profit. By reason, I never bought in this zone here that I'm squaring, or in this one. I've bought here on the downside because I know it was an opportunity, and I've bought at around the 30k level, so up here somewhere, and there. Sure, there was a little bit of a loss here, but as you can tell, I'm back in profit. Everything I've done was by reading the market, following events, and knowing and analyzing cycles. And that's something you guys can do too. For a lot of times on my social media, I give the necessary pointers, and I'm telling you guys, now's a good chance, now's a good opportunity. Hold your coins, watch out, do not pay taxes, etc., etc. These are very basic lessons. These are very basic. Well, this is very basic knowledge I'm sharing here, and a lot of people do not seem to get them, which to me, once again, is an indication we are very, very early. And with that, I want to finish this little Blockchain Talks episode. I thank you all for watching, and up until next time.